Short-term trading strategies are a popular way to take advantage of smaller market movements when compared to traditional investments. We take a look at this more speculative style of trading and how you can use it. What is short-term trading? Short-term trading involves taking a position that can last from seconds to several days. It is used as an alternative to the more traditional buy and hold strategy, in which you'd hold a position for weeks, months, or even years. Short-term trading focuses mainly on price action, rather than the long-term fundamentals of an asset. This trading style attempts to profit from quick moves in market prices, and so seeks out market volatility around key economic data releases, company earnings, and political events. Short-term trading is also referred to as active trading, as the style involved differs so heavily from the strategy of investing in or trading passive funds. It is usually speculation-based, which means that it doesn't need to involve the buying and selling of the underlying assets themselves. Instead, short-term traders tend to favor derivative instruments, that mean they can enter and exit trades without needing to own the asset itself. These include CFDs, spread bets and options, all of which enable traders to profit from rising and falling market prices. How to start short-term trading? If you want to start short-term trading, you should choose which type of short-term trader you'll be. Research which markets you can trade short-term. Decide on a short-term strategy. Practice using your strategy with the Try the platform. Open an account to trade on live markets. What are the types of short-term traders? There are a variety of different styles that short-term traders can choose from, depending on their time constraints and risk appetite. These are scalpers, day traders, swing traders. Let us learn more about the most popular trading styles and strategies. Scalping. Scalpers profit from small price changes by opening positions that can last anywhere between seconds and minutes, but usually not longer. It is by far the shortest of the trading styles listed here. A scalper will aim to make small profits as frequently as possible by entering a trade and exiting it as soon as the market moves in their favor. Scalping profits off the top of a market trend. It is the complete opposite to the idea of letting profits run. These traders grab profits and cut losses as soon as possible in order to maintain a high win-to-loss ratio. Scalping is incredibly time-intensive and is not for the part-time trader. In fact, many scalpers choose to use high-frequency trading as a means of executing a number of orders in seconds. For those looking to trade over the short term, this style can be lucrative but also risky. It is important to be aware of the costs you will incur for opening and closing trades, and to ensure these costs do not erode your profits. Day traders. Day traders buy and sell assets within a single trading day, often to avoid paying overnight costs. This is classified as a short-term trading style because it seeks to take advantage of small market movements by trading frequently throughout the day. This style involves making fast decisions in order to get in and out of trades quickly and efficiently. Even within a single trading day, there can be vast amounts of volatility, which is needed to create an advantageous trading environment, but also create risks to be aware of. For example, rapid price changes can lead to slippage. However, while day traders will close their trades at the end of each day, many other styles of short-term trading are prepared to let positions run if necessary. Swing traders. Swing traders focus on taking a position within a larger move, which could last several days or weeks. It is the longest style of short-term trading, as it takes advantage of medium-term movements too. Swing traders will attempt to spot a trend and capitalize on the rises and falls within the overall price movement. They will often rely on technical analysis to identify the entry and exit points for each trade. Swing trading is still classed as a short-term trading style, but there is no specific time frame that constrains it. So in theory, it could also classify as a long-term trading style, as the trend could last longer than a couple of weeks.